Welcome to a Gold Nugget Report, a special presentation brought to you by goldseek.com radio. This week's special guest, Dr. Marc Faber, the editor of the Gloom, Boom, and Doom Report. Only a few weeks ago, unemployment was on the decline, and the economy seemed to be back on track. But last week, the music stopped, with the Labor Department's unemployment rate showing the highest reading in decades. Returning to Gold Seek Radio to discuss the ramifications of the deteriorating economic conditions, and all the way from Thailand, Dr. Marc Faber, editor of the Gloom, Boom, Doom Report. Welcome back, Dr. Faber.
Thank you. My pleasure.
Bernanke and company, they were patting themselves on the back for a job well done just a few weeks ago. The 0.1% downtick in unemployment seemed to be indicating that the worst of the recession had passed. But just last week, the 9.7% unemployment figure shows that double-digit unemployment is now a reality. Is this a classic double-dip recession scenario?
Well, basically, the economy globally fell off the cliff between September 2008 and March of this year. And since then, because of huge and unprecedented stimulus packages, and also because of quantitative easing by central banks, read money printing, the global economy has stabilized. But it would be wrong to assume that we are in the midst of a powerful recovery. There are some sectors of the economy that have recovered somewhat or are in the process of recovering, but others are still weakening. And so, in my opinion, we've reached probably the bottom of the valley for the time being, but I doubt that we will climb out of this slump anytime soon. And we have to put this bottom of the valley into the perspective of these unprecedented government stimulus packages.
There has been at least promised approximately $12 to $14 trillion. Whether or not that money will actually reach the sources that they were intended. But, Ben Bernanke recently said that the prospects for a return to growth in the near term appear good. You think that the worst then is behind us, agreeing with Professor Bernanke?
Well, actually, I never listened to what he has. His record as a forecaster, as a Fed chairman, is a total catastrophe. So I advise actually your listeners to switch off each time he opens. Each time he says something is abstract from the human knowledge.
You actually lose credit points from your university for taking a class from Dr. Bernanke, an anti-degree in economics. Well, the government has also promised $12 trillion or so total here, and most of that went to bail out Freddie Mac, Fannie Mae, Bank of America, General Motors, and many others. And this bailout nation, as people are calling it, we're hearing that the government has earned a $4 billion profit on some of these investments in toxic securities. But at the end of the day, this just sounds like bureaucratic rhetoric to me. Who cares if investments in toxic debt provide a short-term profit? In the long term, Dr. Faber, isn't the taxpayer still on the hook for about $10 trillion in liabilities?
What the government is telling you is like what you hear at dinner parties. You have investors, they own 50 stocks, 49 have losses, and one stock by accident went up. So the one stock that went up is then discussed how great and smart the respective dinner participant is as an investor. But the 49 where losses have occurred, they are, of course, not discussed. And this is the position of the U.S. government. And also, I'd like to emphasize that it is a totally wrong notion of people to assume that the government does anything for the people. The government is there to do something for itself and not for the people.
Back to the domestic economy, you would say then we're at least in for a double dip in the downturn in domestic economic output, but would you also say that we are facing a potential lost generation over the next 10 years or so?
Well, basically, economically speaking, we have already experienced a 10-year period during which the economy has not performed. For the first time since the Depression, we have a recession where in this recession employment has now dipped below the level it was 10 years ago, but the population has in the meantime grown by 30 million. So the whole recovery was an artificial recovery in the first place, where the middle class and the working class did not benefit. The beneficiaries were the Wall Street fat cats and so forth. And I'm not saying that because of any grudge. I'm also in the financial sector and I benefited from all this. But that is the truth of the matter. And the way the bailouts are being handled and the way quantitative easing is being applied, it won't help the man on the street. That should be clear. It will help the Wall Street interest, it will help speculation, and it also will help drive down the standards of living and the US dollar.